chaos in the Treasury market and the geopolitical environment, we wanted to bring you some timely thoughts. Now, obviously, for decades, the Treasury market has been the backbone of the financial system and a beacon of economic stability, not just here in the US, but also around the world. But a rapid change in rates and a supply-demand imbalance in Treasuries brought about by a number of factors has created all kinds of issues, some of which I've covered in my recent economic newsletters for Goldline. But the question at hand today is whether gold may be the new flight to safety asset. Now, gold's always been a safe haven of sorts, but some things have shifted recently. Let's start with the Treasury piece. At the last close of trading and before the Hamas invasion of Israel, the 10-year Treasury yield had closed at 4.79%. Now, as might be expected, given this horrible and unexpected event, investors flocked into a safety trade and they bought Treasuries. Since those bond prices and yields move in the inverse, as more people buy Treasuries, the yield then goes down. That was the case here, and the 10-year yield moved down to 4.59% over several days. But as economist Luke Gromen from FFTT noted in a recent piece, that only lasted a short time. He shared that after a mere 6 trading days, that the yield had risen above 4.79%. At the time I'm recording this, we are at 4.89% after having pierced the 5% level intraday just a few days ago. Gromen said, quote, "This should be instructive to long-term U.S. Treasury bulls in our view. The, quote, safety bid has been to gold and Bitcoin, not to long-term U.S. Treasuries," end quote. Now, given this recent price action, as many commentators have noted, the U.S. Treasury bond market is amidst one of the largest sell-offs ever in history. In the Financial Times, noted economist Mohamed El-Erian talked about the bond market losing its strategic footing, going deeper than just inflation data and interest rate moves. He says, quote, "The U.S. bond market is losing its strategic footing, whether in economics, policy, or technical aspects," end quote. He later continued, quote, "No matter how you look at it, the world's most crucial benchmark market is on an unpredictable journey with an uncertain destination," end quote. With the geopolitical situation extremely fragile at a time when financial stability of the country is in peril, it's unclear whether or not further escalation of a variety of issues will bring people back to longer-term bonds as it has historically. Last month, macro strategist Tavi Costa shared on X.com his opinion that, quote, "Treasuries are no longer the safest alternative. In fact, for the first time in 45 years, U.S. Treasuries now have higher downside volatility than gold. This is undeniably crucial. The shifting dynamics of capital moving away from crowded equity and fixed income holdings as investors seek new investment opportunities could have profound implications in financial markets. This is where gold, commodities, and overall hard assets are poised to play a significant role during this transitional phase from the traditional 60-40 portfolios," end quote. We are also seeing central banks selling Treasuries instead of gold to raise U.S. dollars. Now, on the other hand, in recent days, hedge fund manager Bill Ackman, who recently bet against long-term Treasuries, covered that short bet. So it's possible that further uncertainty, as I've noted in previous pieces, could actually create a flight to bonds for some period of time. But it's clear that wherever we turn, there is a ton of uncertainty and headwinds across markets in both the short and long term. It just makes sense for you to be hedged. Now, if you haven't hedged your portfolio, or maybe you haven't hedged enough given the current economic backdrop, consider physical gold and silver as a potential long-term hedge. These are incredibly tenuous times. So give my friends at Goldline a call, 800-319-9533, and they can help you find the right combination of precious metals for your current needs and objectives. Things are moving rapidly, so we're going to keep you posted. But as we have been signaling, things are shaping up to be more hectic in the year ahead instead of less hectic. Make sure you have protected your wealth to the best of your ability. I'm Carol Roth for Goldline. We will see you again soon.
The views and opinions expressed in this video are those of Carol Roth and do not necessarily reflect the views or positions of Goldline or its parent company or affiliates. These views and opinions may have been previously disseminated in other media.